Forex Focus brought to you by IG. Our high gold prices signaling a dollar collapse. Crazy price action we're seeing in gold prices right now. But weirdly enough, and we'll show you why this is so weird in a second, given historical relationships between dollar and gold, dollar not falling and kind of creating a standoff of sorts of, which one is right? Is gold up for good reason that this fear we're seeing globally is here to stay and could get even worse? Or is U.S. Economic data and U.S. dollar strength, U.S. interest rate strength going to be the prevailing winner here? And this fear that we're seeing, that spiking gold prices, is just transitory. I don't have the answer to that, but definitely interesting to see gold prices spiking so much. And we'll show the relationship in a second to show why, gold at above 1950, close to $2,000 again, usually historically has coincided with lower dollar prices. Right now, both of them holding on to near their highs. But anyways, the gold price action that we've seen up over $100 in the last 10 days. Today was another update in gold. Gold prices have gone from 1830. And remember when they fell down to 1830 on October 5th, it looked like gold might take a leg lower under 1800. I mean, look at that fall from the end of September where it was trading in the mid 1900s, huge fall off to below 1850. But in the last 10 trading days has seen quite a move to the upside. And mostly around fear in the Middle East and people buying this flight to quality market here. Now, $2,000 gold is historically very rare. We're close to that level again. If you've been trading gold in the last few months, you might say, well, Frank, we've seen gold plenty of times. Yeah, we have seen gold plenty of times above $2,000 in the last couple of months, in the last couple of years. But you go back to 2010, and there's actually only 33 closes above $2,000. And that's a little less than 1% of trading days since 2010. So yes, very historically rare, more prevalent in the recent past since the pandemic. And you see that spike right off of the pandemic up to $2,000 for the first time since 2010. Yeah, it's been more normal recently, but still, even on those spikes up to above $2,000, hasn't stayed there very long. Now, as I layer gold prices now on top of dollar yen, which is a decent benchmark for just the dollar in general, you can see that these markets usually moving inversely. As you go from left to right on this chart, you'll see that in the early 2010s, gold spikes up to $1,900 and dollar yen moves towards its lows, pretty much what has been the lows since 2010 in that same time frame. Now in 2015, 2016 time frame there, you have a dollar bull run, dollar yen getting up to 120 in that period. Gold prices falling towards their lows for this entire time frame, the last 10 years plus. And so again, that inverse relationship playing up, dollar up, gold down. And then at the start of the pandemic, it might seem kind of crazy because it's been just a hell of a dollar bull run over the last couple of years here, but dollar moved lower from 2020 to 2021 there, and that coincided with gold getting up to its highest prices in the last decade. Now we've been bouncing around and right now find ourselves at a dollar yen market that's close to 150, which has really been around the high for the last 30 years. And we have a gold market that's close to $2,000 again, which, like we say, has traded above $2,000 and closed there less than 1% of the time. So both markets at historical highs. And just to hammer this home again, you see the stark negative correlation between these two markets historically. These correlations can break down, and they have in the past. You see the correlation getting to, negative 0.25, negative 0.3. But right now, even though these markets are both near their highs, the correlation is around negative 0.7, which is is pretty powerful. You rarely see markets positive or negative in the 8 or 9 handle, unless you're talking about, the S&P compared to the NASDAQ, which have so much stock crossover there. You have gold, a metals commodity, and US dollar, a currency, and you have that 0.7 correlation currently to the downside. That is inverse correlation, which is pretty important there. Now, how will this play out? Of course, if I knew the answer, I probably wouldn't be here, but no one knows the answer because there's a ton of different ways that this can play out. You have 2 different flight to quality markets that are moving higher for 2 completely different reasons, and they usually don't move higher together. And you have the US dollar on the one hand moving higher because of US economy outperforming global economies in Europe and Asia, and a lot of people flocking to that stronger US dollar, the stronger US interest rates. On the other hand, gold prices moving higher on the risk-off sentiment that we're seeing, especially in the Middle East, but also in neighboring territories and spreading out, it seems, every day, causing gold prices to get up there, but not yet spreading to the U.S. economic data. U.S. interest rates now still sitting near highs since 2007. So will one of these 2 flights to quality, one of these 2 measures, U.S. economy outperformance or risk off sentiment, take hold? Or will both continue, and we could continue to see high gold prices and high dollar prices as well? Or will both of them back off? We could see, of course, U.S. economic data start coming in poorer and Middle East tensions be resolved. Here's a couple of different theoretical potential outcomes here. If risk-off sentiment does expand, maybe fear enters the U.S. market and that dollar does get hit a little bit. Maybe the Fed here in the U.S. has to lower interest rates because they fear this global instability, and maybe gold stays where it is or even potentially moves higher. Now, if fear subsides, on the other hand, and U.S. economic data holds in, you might have that dollar stay where it's at or even expand further, and gold prices come back to the 1,700 to 1,800 level where they've traded at over the course of the last several years, more normally than these $2,000 highs that we've seen in recent years. Now, of course, you could have risk-off sentiment paired with that U.S. outperformance, and I didn't even throw on there the fact that risk-on sentiment can come in the market, and you could see potential outperformance. Maybe China does pick things up. Maybe the Euro area and the UK do pick things up. Japan finally picks up in some of its economic data. A lot of different ways that this can go. You can assign your different probabilities and likelihoods and view the market given your strategy and opinion. But we'll see how sustainable it can be for gold prices to be as high as they are with U.S. dollars and interest rates remaining high as well.